The RBNZ is an outlaw among central banks. Those are the words of my next guest, used to describe the Reserve Bank of New Zealand's move today to become the first of the developed nations to begin raising borrowing costs, increasing the OCR by 25 basis points to 2.75%, also marking its first hike in 3 years. Felix Delbruck of Westpac is on the line. Felix, just how much of a landmark is this decision?
Well, Natalie, in one sense, of course, it's a landmark decision. It's the first time that the Reserve Bank of New Zealand has raised its cash rate since way back in July 2010. But what it isn't is a surprise. It's been extremely well signalled, and markets were fully cognizant of the idea that rates would rise today, and they did.
Governor Wheeler has stated that the central bank sees up to 125 basis points of rate increases this year. This is a much faster pace than the market had priced in. While you can't fault this statement for a clear forward guidance policy, is this really viable? And one may ask, why the sudden rush for movement?
Look, I think first of all, the signal of 125 basis points this year, it was a little bit stronger than markets had priced in. So markets had priced in something a little over 100 basis points. What was perhaps a bit more of a surprise to markets is the Reserve Bank signal of where it thinks the cash rate will head further down the track. So they're now expecting to take the cash rate to 5% or thereabouts by early 2017. Markets are priced in around 4.5%. That's a more significant surprise, and markets may still fully digest that in the day ahead. As far as whether this is all viable, look, of course, these forecasts do make the Reserve Bank of New Zealand an outlier among central banks, but we need to remember that the New Zealand economy is an outlier among economies at the moment. We've got a multi-billion-dollar earthquake reconstruction boom going on at the moment, and also New Zealand's terms of trade are at 40-year highs. So there's a dairy boom going on as well. So there's good reasons for why the Reserve Bank might be wanting to behave differently than some other central banks at the moment. And I think what would also have given the Reserve Bank comfort about the viability of its plans today is the fairly muted market reaction. So, look, they have signalled this for some time, and the concern was always that the New Zealand dollar might pop higher when they actually do raise interest rates, and that's not really happened. So I think that'll have given the Reserve Bank some comfort. As far as their motivation in raising interest rates, look, they cut the cash rate to record low levels back in early 2010, just after the serious earthquake we had in Canterbury at the time. Now, that was an emergency measure. Now we're in the rebuilding phase. There's early signs of inflation pressures emerging. So their judgment is basically the time for emergency monetary policy settings is over. What they do want to do is to re-establish the 2% target that they're committed to, and re-establish that in people's minds. And so they really don't want to be seen to be getting behind the curve. And I think that's really what's motivating them now. They want to get in there before they have an inflation problem to deal with later on.
You mentioned there inflation, and today's move by the RBNZ could be considered early offensive action to contain what's been described as rising inflationary pressures. In which sectors of New Zealand's economy are these pressures being felt most acutely?
Well, we've already seen quite significant inflation pressures in the Canterbury region of New Zealand and in the construction sector for some time. Now, Canterbury's where the city of Christchurch is, which is where all the rebuilding is happening at the moment. Now, all of that's not surprising, of course. The concern has been that those inflation pressures might spread to the rest of the country. And what we're seeing now is early signs of that happening. So construction inflation is now slowly rising elsewhere. In surveys, businesses are saying that they're expecting to raise prices over the coming year. Inflation expectations are just ticking up a little bit. So, look, it's early days, but as I said, the Reserve Bank is keen to stay ahead of the curve and move early.
With today's decision meeting, as you say, with market expectation, what will the trading plan be now for the Kiwi dollar? Governor Wheeler commented that he's not expecting significant changes.
Look, as I said, the statement was actually a little bit more hawkish than markets had expected, so we might see a little bit more upside for the Kiwi in the near term. But I think looking further ahead, further upside is probably limited, and the reason, as you say, is that this has been very well signalled. A sequence of rate increases is already priced in by markets. So while that's reason for the New Zealand dollar already being high, it's not a reason for it to go much higher. What I don't expect to happen this year in this kind of environment is the Kiwi dollar to come off. It really is a very supportive environment at the moment.
Felix, many thanks for your time, and viewers, thanks for watching. That's all for now. Goodbye.